10-year note yields hit a 5-week high, pushing to the upper end of the recent range, north of 190, but not able to gather any momentum once we got through there. And we've been in this territory before with yields holding on the highs, only to see them reverse back to sort of the middle of that range, that 165 to 195 or 170 to 195 range, back towards 180. And while it hasn't been the case today, the market's stalling a little bit here on the sell-off in bonds and seeing yields push higher. So right now we're holding at the high end of the range, but we aren't seeing any real momentum through. It'll be interesting to see what happens the rest of the week. We've got the holiday markets. We've got a lot of what-ifs thrown around out there, whether it be economic, political, central bank related, and all those may be keeping the bond market at bay, at least for today. But again, pushing towards the highs of the recent range and staying there, at least for right now. And I think moving forward, it'll be very interesting to see if we do push through that 195 area up towards 2%, if sellers really start to come in, or then do we see buyers come back in with the idea that this thing is not over yet as far as forward guidance to the first quarter of next year, recession risk, and the whole global trade scenario that we played out over 1 million times between the U.S. and China. Market volatility? Well, market volatility got crushed earlier this week, but today we saw a modest little uptick, and that's going to happen when you're starting to risk trading outside of expectations. That's really what happens with volatility. Is volatility declines when you hold those expectations, and when you break those expectations, volatility bids. It was modestly up higher, certainly nothing to write home about, but certainly off those recent lows that we saw this week, it's good to see volatility bouncing back a little bit, because we are at the upper end of one of the range that's been holding since really going back to early October. And lastly, what do we have ahead? Well, we do have a couple of central bank meetings still to come this week, one from the Bank of Japan, one from the Bank of England. We also will continue to watch some of the economic data that comes out, Philly Fed being one of them. And the trade and political mumbo jumbo that we've been seeing, I think, is really what's paralyzing the markets. We'd say the market, the bond yields are holding at their highs. Stocks are also not seeing any extension of their gains, holding at all-time highs. So with stocks on their recent all-time highs, bonds at their recent high yields, you've seen kind of the gold market kind of hovering in the midpoint. We aren't seeing any real breakouts here. We're seeing everything just sort of hold steady, and maybe they're waiting for something that's going to happen with the impeachment process with President Trump. Maybe they're waiting for some kind of confirmation from the U.S.-China trade deal phase 1 that was all put into place but not yet signed. And I think at this point the economic data may start to come into play. We heard from FedEx today their earnings were abominable, and that could be a canary in the coal line for global commerce. And yes, I know a lot of that is linked to this whole trade deal that hasn't gone through yet, but certainly going forward, I'd like to have heard some better forward guidance out of them. They're seeing this as a low point, but again, when FedEx numbers are down, it is definitely a sign that the economy may be in jeopardy. So a few things to keep an eye on the rest of this week, and as we head into the holiday season, right now seeing bond yields hold on their highs with stocks on their highs. And could we see both momentum shifts higher, or will things revert back to the mean? We've yet to see.